Good evening, everybody. Well, as we can see, nothing has changed as far as the steady uptrend, healthy uptrend. We got pullbacks up, pullbacks up, a couple of days of pullback up. So as long as we're not skyrocketing up, which means there won't be a skyrocketing back down, just makes it a very healthy trend, especially when they sell it off in the morning and buy in the afternoon, or in this case, they started buying a few minutes after they opened. We could see that in the NASDAQ, where they actually opened it on the T-line and immediately started taking it positive. So that's still a good indication that there's backing and filling in this uptrend, so it's not like there's exuberance coming into this market. And this morning when we woke up, the DOHA meeting apparently knocked crude oil prices down, but it didn't take too long for it to turn around and start heading back up. So that's where being able to see what the graphics are on charts like Whiting opened lower today may have been a little bit nervous, but as soon as you start seeing the crude oil prices start coming back up, and you can immediately see the bulls coming in, the first inclination you have to have is, well, they're not selling it off. They're actually opening it lower and they're doing some buying here. So that may not be something that's demonstrating a rip-roaring selling in the crude oil. We saw the same thing in our position in Rice. Rice Energy opened and immediately started trading positive. So the nice thing about seeing the graphics is if you see something open, we'll tell you right away if you're going to be looking at a red candle or a green candle. If you see it starting to turn green, pretty much tells you as soon as they opened it, there's buying. You wouldn't call it a belt hold, but you would call it a left-right combo bullish engulfing. You want to see it significantly out of the trading range to consider it a belt hold. And this one's just not that significant out of the price range. Gold started back up, traded a little bit positive today. I can see after hours it's trading down, but it's only trading down $3.70. So what we might be looking at on a longer term basis is kind of a big fry pan bottom setup. Oh, I didn't have time to even put this out because this was a quick trade, but you can see that after they failed up here at the 50, doing a bearish engulfing signal, Stochastics not really knowing which way it wanted to go. Today, they slammed it right on the open, which told you exactly which way they were taking it early. So made some money, and this one still probably has good prospects that if they start trading this one lower, we're in wave one, wave two. If they trade it lower than this level right here, tells us it's broken the support, they're going down further. Cocoa for trading something slower because it doesn't trade very actively, but you can see the pattern. Bullish Harami up above the T-line, did some backing and filling. Next likely target again is up here at the 200-day moving average. Oh, the Russell still showed you that they weren't going to resist at the 200 today anyways. Here's one to keep an eye on. We'll probably put a buy recommendation. Oops, it's already opened. A buy recommendation on anything above today's high. As you can see, there's a resistance level right there. If it broke through that, next target coming out of this resistance area sideways pattern, tells you probably now you're heading for the next target. Oh, let's see, what about should I looking at here? CTEK, this is cotton. Notice what cotton's doing. Big fry pan bottom. There's your kind of your real rapid bobble. Hit here, pulled back. This was definitely needs to be bought on positive trading tomorrow. Oh, the Russell's on the 200. All right. Got to remember each, they have different, I guess they call it algorithms to set up their chart systems. So in either case, if it's right on the 200 or whether it's above the 200, doesn't really matter. If they open this positive tomorrow, on your chart, it's going to tell you they're not resistant at the 200. And on this chart, it's telling you they're continuing the uptrend. Let's see. All right. All right. We're going to kind of look. I hope I don't have as many stocks as I normally do. I'm going to try to break each one down in the analysis. So again, there's that bobble breakout, and this is on ACAD, using the 200 now that it broke through it, trying to use it as support, which makes it very simple. If it opens positive tomorrow, this uptrend is going to be in progress because the 200 is not acting as a resistance level anymore, or not as a resistance, but it's also showing that it's right now going to be using it as a support level. KTOV, another one that we picked up not too long ago, but as long as this one stays, notice how, again, the telling factor on a lot of these is anytime you can see that it's trading and it bounces up off the T-line, that's pretty much telling you the uptrend is going to remain in progress, that they're using the T-line as a support. Now, remember, they're not intentionally using the T-line as support. That's that kind of natural support and resistance level. MKTO, another one that we've been holding on to, as long as they can't close this below the T-line. And notice how the T-line continues to act as upside support. Now you had a little gap up. If it breaks through here, obviously the 200 is the likely target. TCK came back pretty strong today. Another one that opened lower and immediately started trading positive. So all you can do with this one right now is stay long, as long as it doesn't close below the T-line. Oops, let's see. Oh, lost my space here. Yeah, William, hold on to your individual ones. We'll get to them at the end. When I tell Jim to do the double line, that's when you type in your requests. Trox also has been an indicator that when they came up and did the bobble, went through, now using everything right now as support. Another one that you can usually be pretty confident to buy on positive trading from here, telling you that 200 is acting as a support level, which that was no wonder that one didn't look real exciting. It was Trove that was picking up a lot of steam after it came up through the 200. We recommended Watt today because, again, here's your fry pan bottom. There you are, just about ready to break out. So buying this one on positive trading was a good probability because it was coming out of this fry pan bottom. Now we're right at the highs, so which means that if they open this one positive, you can still be buying it because there's still probably a lot of upside on this one. And CNX, there's your left-right combo. Another one to be bought on positive trading tomorrow. We're still watching Lexmark, or we're still in Lexmark, because there's, once again, the same scenario. They went through, or they came up, used the 200 as resistance. Came up, now came back and used it as support. So now we're heading back up on a nice steady uptrend. Again, with the prospects, can you mention the targets? A lot of them, I can't even tell you what the targets are. They're just in steady uptrends. So a lot of them, if they're in a steady uptrend, you're going to be staying long until you see that reversal signal. TDW, little bullish engulfing left-right combo right off the T-line. So if this starts trading positive tomorrow, especially breaking this area, let's make this bigger. More than likely, you're coming back up to test the high, which also coincides with the 200-day moving average. And let's see. Oh, FIT. A lot of people are still playing FIT. Another one where all you can do right now is just stay long as it stays above the T-line. And so, yeah, it's hard to, on these, that they're up in that steady uptrends, yeah, you really can't pick out an area where they're going to. There's nothing out here that shows us where the target will be. Did I do this one already? No. But here's the reason why we recommended this one today. Notice the left-right combo, morning star signal, followed by a doji sandwich, your morning star signal, doji sandwich, morning sandwich, McMuffin, confirmed. Now you're right at this level. You can still be buying this one on positive trading tomorrow. And did I do crude oil? Crude oil was what made the oil stocks. Did I skip this one? Notice when they opened it and brought it back up, you're still in this trading range. They've opened it a little bit positive today or tonight. So even on the 10-minute chart, you had that fry pan bottom. And usually, this is why you always watch even at the end of a fry pan bottom. A lot of times you get that whipsaw action, and then they take off. So even if you were trading this on the 10-minute chart, you'd still be ready to buy this on kind of a cup and handle strong move to the upside at this point. So, and the reason I'm mentioning this is this could be a daily chart, this could be a 10-minute chart, this could be a 1-minute chart. It doesn't really matter. The patterns all work the same way. Let's see, what else do we have here? Oh, I got to get back off the 10-minute chart. NVDQ. See if this is your fry pan bottom classic J-hook pattern. And how do we identify J-hook pattern starting? Based upon what signals we start seeing in here. In this case, it was a bullish engulfing, left-right combo, another left-right combo, and now they're using the T-line as support. You can already see the trajectory starting to form up this direction. So anyways, this one, you still can be buying on positive trading tomorrow. Hold on, I'm going to keep losing my spot here. Oh, CPXX had a big day today. Big long-legged doji. Now, see the pattern that it was coming off of. Late last week, somebody in the chat mentioned your daily picks. I'm not sure what that is. Your morning, afternoon comments are all that I am aware of as picks. Do you send out? No, at night, if you go to stock picks, you'll see, and if it's not too late, I put out a video with it to explain why. If it gets late, I just put out buy XYZ greater than 52 or whatever. So each night there are stock picks put out. And then usually we'll see those reiterated in the morning and afternoon comments. Usually the picks we made that day, I'll kind of do a follow-up of what to do with those picks. So on this one, CPXX was a very classic 45 degree, but notice what happened up here on big volume, did a big doji sandwich. And that, not doji sandwich, long-legged doji, which makes this very simple. If they open this positive tomorrow, you stay long. If they open it lower, take your profits. Because that told you there was lots of indecision going on up here in the overbought area. So anytime you see that long-legged doji, get ready to move one way or the other. Now here's another one, ALDR. Ever since the big gap up move, nice 45 degree. And SCI, same scenario, big move, 45 degree. Let's see. Anyways, I'm showing you these because anytime you see these big power moves, usually coming out of the oversold area, this is what you expect afterwards, is that you're going to be traveling in a 45 degree trajectory after that. And very simple after at that point is that you stay long as you stay above the T line. Whoops, we did Whiting, again, opened up positive. Haas, another one that did a bullish engulfing. Get ready to buy this one on positive trading. And we did Rice. The golds kind of had a hovering day today, but they're still in an uptrend. There's AGI. There's SA. Now SA, whoops, has as good a looking chart as anything. You got the big fry pan bottom, the J-hook pattern that signals right smack dab on the T line. This one you buy immediately on positive trading tomorrow. Gold itself, as we saw, is just kind of hovering. We're still watching to see if now it's in a big fry pan bottom pattern. Let's see, and another one in that area. CDE, we didn't buy a big position because it was an inexpensive stock, but I forgot where we bought it, somewhere down in here. So it's got a good 50, over almost a 65% upside since we got in it. And very simple, we'll just stay with it until we see that sell signal. Let's see, so do you dump on negative trading? Bob, clarify that a little bit better. How long do I wait after the open? Well, some, like Rice, when it opened lower, I'm thinking, oh man, I got to close this out. As you can see, right in about the first couple minutes, if that, they started bringing it up pretty strong. Let's see. So, yeah, a lot of times if I see something that gaps down, and Whiting was an example of that today, I'm thinking, all right, it's time to take profits here if they start trading this lower. I think after about 2 or 3 minutes, you can see that there's buying already coming in. So sometimes I'll sit and watch it for 2, 3, 5 minutes. Other times, if it opens and immediately starts trading off pretty hefty, I try to get out of it as fast as possible. On the other hand, if it opens and starts trading positive, I try to get in it as fast as possible. But there will be other mornings where the market will open down and the stock will open positive, and it may sit there for 10, 20, 30 minutes before they really get it moving. So it's again, just watching and usually if I'm ready to get into something, If it's something real fast, I'll flip to my 5-minute chart. If it's something that's been sitting there for a little bit, I'll flip to the 10-minute chart and seeing when the buying comes in. All right, and buying the patterns obviously is the thing to do because you get two benefits out of buying a pattern. One, if it moves, it's going to move big time. If it doesn't move, if the market all of a sudden turns around and goes the opposite direction real quick, they usually take longer before it starts backing off. The pattern usually has other factors built into it other than just the market itself. So time that if the market all of a sudden craters, gives you a few extra minutes, day or whatever to close out the trade. So here's another J-hook pattern on CFMS. And again, the reason we can identify a good J-hook pattern is we can see exactly what type of signals were occurring right here on the T-line that told us the selling has stopped. A bullish Harami confirmed, and then we can start seeing what pattern is setting up, the J-hook pattern. Is this it, Kiwi? Kiwi, watch this one, because if it opens positive, you've obviously got that J-hook pattern. Why would we suspect that? Because notice when they took it up strong. When they pulled it back, it was very indecisive. So you get ready to buy this one, because strong up, indecisive pullback usually means there's going to be more upside. You said buy SA on positive. If I have to do it, I get rid. If I have it. Oh, if you have it. Yeah, at this point, not necessarily closing it because it opens lower. I wouldn't sell it unless it does close below the T-line. Again, that's why you're using the T-line and the patterns. Remember, all this combination of seeing what the pattern is and what the T-line is doing and what the pattern is, how it's being created based upon what signals you're seeing creating that pattern, just gives you a much more clear indication of what's going on in investor sentiment on a what do I say, a day-by-day basis, and what the overall pattern development is by adding up all those daily signals. DVAX, another fry pan bottom, J-hook pattern. Where's the next likely target? The 200. But if this is wave one, more than likely they'll make the top the next target. Okay, so the fry pan bottom also, another good pattern. That's why we were buying Watt today. We've been putting U2 or 2U on the watch, because there's that fry pan bottom with your dimple right in here. Well, Alan asked that after we do the double line. What is the light blue line on your chart? This one, the pinkish line, is the 20-day or simple moving average. And the blue line, obviously the 50. Red is the 200. Black line is our T line. And OCUL, observe the obvious. The obvious is that they've resisted here at the 200. If they get through, the bob will break out. Wave one, wave two, wave three will be in progress. What are waves? Waves are a price movement. You can see there's a wave right here. Then you can see there's a wave right here. And then the next wave would be the next price move. So remember, that's what Elliott wave kind of indicated to everybody, that prices don't move up or down in a straight line. They usually move in waves. Run also has this kind of big rounding bottom. It broke out through the 50. But I'd be a much stronger buyer if it breaks up through this level, telling us they're breaking out into, again, wave one Wave 2, fry pan bottom. Wave 3 is the slingshot effect out of that wave, or out of that fry pan bottom pattern. And here's what usually happens. You can see you kind of had a fry pan bottom. It was a little bit better. Uh-oh, what have I got? Have this kind of fry pan bottom, and then you start getting this whipsaw action. So if they start trading this one positive, you can be buying it immediately, especially if it comes up through this level. Because this is what you usually see. If a fry pan bottom doesn't break right out, you get some whipsaw. And that whipsaw usually pushes things to the upside. Here's INO, another fry pan bottom breakout. Get ready to buy this one. And the reason we use wave 1, wave 2, wave 3 is we usually know that wave 1 and wave 3 are going to be about equivalent. So at least we know what our projected price target will be for the next wave. We've bought CIT the other day because of the fry pan bottom, and we have a very simple rule. And notice what started this one also. Right smack dab on the 50-day moving average. Notice all the indecision. Remember, if one doji means indecision, a series of dojis means much greater indecision. And anytime you see indecision, you look to see what way that decision's going to go. And the longer this indecision occurs, usually the more powerful the next wave is going to be. Oh, what did I just do? I don't know. Oh, no, CIT. So CIT, you can still be buying this one because your stochastics are still coming up. You can see they were, after some backing and filling, they were using the T-line as support. Where do you start? Just wherever you can see the trend started, anywhere in here. And again, it doesn't have to be exact. Doesn't matter whether this is, let's see, it came from about the $26 range to the $36 area, 10 points. You kind of extrapolate that from here at 32, about the $42 area might be your target. Does it make any difference where the trade bobbles? No, just as long as you can see that it ran into a resistance, whether it was the 50, the 20, anything, and then pulls back, hits the next support level, and then comes back up through that original resistance level. Oh, and another little factor here was, notice when it started coming out, it gapped up through. So you had an inverted hammer after a series of dojis, a gap up through that level. And that was the reason why we were recommending getting into Amazon, because notice where it gapped up. Coming out of this little fry pan bottom at the resistance level when it gapped up, just told us there was a new wave in progress. Oh, the Nikkei up that much? Wow. You would think right now the Dow futures are down 24. So that was the reason to go after Amazon. So if you're an option trader, this becomes the ultimate entry point. This tells you if they break out through this level, they're in a new wave. If they gap up through that level, you're in a new wave with great enthusiasm. Can you explain the sentiment of an inverted hammer? What did I do that? An inverted hammer, this one's an inverted hammer basically, is the bears are happy, the bears are happy, the bears are happy, and then all of a sudden they're very nervous. The bulls have stepped in. And then by the end of the day, they take it back down to the bottom of the trading range in the oversold area. The bears are relieved. But they were nervous that day. Next day, they open up positive. The bears say, shoot, the bulls are still here. Get me out of this trade. So what I've discovered, and again, this is my own analysis, nothing quantitative as far as going back and doing studies, just over the years, I've evaluated that if you see an inverted hammer, especially in the oversold area, and it opens positive the next day and trades positive, you probably have a 95% probability or greater that you're going to be in an uptrend, which also makes it very simple that if you see an open positive start trading positive, where shouldn't it go? Shouldn't close back below this level. Shouldn't even trade back below this level. If it didn't work, close out the position immediately. Hold on, I'm lost my concentration here because I think somebody's out in the dark mowing the lawn. EBIX. Okay, when they break through a resistance level, tells you there's a new dynamic. Notice how they got here with a doji gap up right to the resistance level. And when they break out through that resistance level, it tells you you have a new dynamic. That's kind of the reason why we're watching wheat tomorrow. If it breaks out through this level after your little doji gap up, probably got another strong uptrend. All right, and Kara, again, here's another case where as long as you notice how it did kind of a waffling in here at the 50. Once it got through the 50, notice what else it did. It came back and used the 50 as support, then started coming back up through this level. I pretty much told you immediately what was happening right here. They weren't going to trade it back down. They were using the 50 as support. That same analysis can be used over here. Ooh, that's not right. Notice on CMRX, came up, kind of did the little bobble, couldn't close below the T line and did a doji sandwich through. So anytime you start seeing this waffling in here, watch to see if they break it out. If they do, you're usually going to get a high percentage, high probability trade set up. Same scenario here on AERI. This is just the obvious. They break through a resistance level, they come back, test it, and what did we see when it got here? Pretty much a little morning star signal. And now they did a doji gap up, not gap up, but breakout of this level. Where do you think our next likely target is going to be? Probably up here, which would kind of equate to wave 1 and wave 3 being the same. And BITA, so if you know that's the fact, that if they break through the 200 after resistant, you're probably going to have a good strong trend or trade. So as far as timing, if you're trading options and they open this positive tomorrow, you start going after one of the options very quickly, because more than likely this is telling you the bobble J-hook patterns in progress. If this is wave 1, which I can calculate, 24 to 28 and a half, 29, 5 points, tells me that we're heading for about the $33 area. So anyways, those are just kind of observations of when to get into a trade at the optimal time. That's why anytime we see a setup, and you can see the pattern it's setting up, that's why you have less, let's say, anxiety about getting into a position. So this is part of that process that I teach a lot of people. They say, oh, I can see the trade setup. I just can't pull the trigger. I do all this analysis. This makes it very simple. The same factors are usually going to occur in a pattern time after time. So if you sit here and say, all right, I identify a fry pan bottom, oh, so now it doesn't really matter. We're not trading the waves of a whole uptrend. We're trading a trend until we see it's time to sell. Then we watch to see if there's another setup for another trend. So An uptrend could have dozens if it stays steady, but a lot of times they just chop around. And so we're not trying to trade the waves. We're only using the waves to calculate where's our next potential target. So, which does two things. It gives us potential target to see whether it's worthwhile to even get into that trade, number one. Or number two, if you're an option trader and you know you only have 2 weeks to expiration and you can see something that might move up based on the wave one, but over the next 2 weeks it might move up 2.5 points, you might say, all right, I'm going to buy the 12s and sell the 13.5s as a spread versus just buying calls outright. What is a McMuffin? That was just a clever little name. McMuffin is, if we know what a Morningstar signal looks like, which is a big down day, a day of indecision, and a big up day, a Morningstar signal, and we know what a doji sandwich is, which is a big up day, a doji followed by another big up day, we know we need confirmation of a Morningstar signal, which it did on the doji. We also know a doji sandwich, that if we see a setup for a doji sandwich, our simple rule of the doji is it's going to trade in the direction of how they open it. So if they start taking this positive, usually this candle right here and this candle right here are about the same magnitude, which means even as a day trade or getting in at the right time, if it opens positive and starts trading positive, you know you've got probably another good day. But we also know the results. We know the results of a Morningstar signal, one of the 12 major signals, is a high probability reversal. We know a doji sandwich, which we can get in at the appropriate time, and we know what the results of a doji sandwich is, that it's usually going to be more upside. But if you combine the two, we've got a Morningstar signal and a doji sandwich. Instead of saying this is a Morningstar signal and a doji sandwich, basically your morning sandwich, which is a McMuffin. That's our scientific method of naming things. Okay, any other questions, general questions on candlesticks? Hold on, Alan. In a minute, I'll tell Jim to do the double line, and then you just type in the symbols we'd like to look at, which you want to keep them to 2 so we can get to everybody. All right, no other questions. Go ahead, Jim, do the double line. Okay, let's see. We'll start off with Halliburton, one of the oils. Again, the open lower and headed up. So anytime you see them open lower and start heading up, I told you there was some sellers they took out here, and usually the uptrend is going to be remain in progress. Newell Rubber, kind of a nice little J-hook pattern setting up. And why do we know it's a J-hook pattern? Because when they pulled it back, it was indecisive. There's your inverted hammer. There's your hammer, bullish confirmation. Now you've got a left-right combo, and we know what the results of a left-right combo is. A positive trading makes that a very high probability trade, and we can see what type of pattern setting up. So this one you definitely want to be buying on positive trading, and all you do is use the T-line as your stop. BAP. You stay long on this one as long as it stays above the T-line. Whoops, what did I do here? Give it one more day, but if it does open positive tomorrow, I'd probably cover the short position, because what you really want to see tomorrow is it open lower and trade lower. But if it opens positive, it's just telling you they aren't selling off with great enthusiasm. Now, even if I covered it on a positive open tomorrow, I'd still put a sell stop about halfway down this candle, because if they have enough strength, once they take it up and usually testing the T-line and selling it off, that means this pattern is still in effect, and the 200 is, or the 50 is still your likely target. AXLL, another one. All you can do on this one is stay long as it stays above the T line. Jazz, same scenario. Notice how it gapped up through the 200. Now the 200 seems to be acting as support. This is where you can be buying on positive trading, or if you're long, you stay long. Seco, nice fry pan bottom. And where is it? It's right at the breakout area. Another one you can buy with confidence on a positive open tomorrow. And I'm pretty sure Seco has pretty good volume in it. Let's see. I think we did ACAD. That was one of the first ones we did. As long as this stays above the 200/T line, you stay with it. And Halo, just stay long. And PGNX, kind of your fry pan bottom, and notice they've gapped up through this resistance level. I'd suspect more upside on this one also. So if you were buying tomorrow, you just use today's open as your stop, because if it came back down through there, which means you're back into this trend channel, you've eliminated everything for the reason for buying it, which was it was breaking out into new territory. SGY, another one is showing a little bit of basing, but I'd want to see some definite confirmation from here. If you're long, you stay long. Just don't let it close below the T line. TRXC, this one I'd be out of. You had your hanging man and then gap down, and they could never bring it back up. I would have closed it out today with it trading below the T line after the gap down. And ARWR, when it gapped up through, puts you in this 45 degree, you're in the overbought area. So the safest place to put your stop is at each day's open after it trades higher, because if it comes down through there, that told you when the profit taking was starting. TTI, another one showing you that the 200 is acting as support, probably going higher from here. Just stay long, not a very big mover, but the next likely target with the T-line acting as support is up here at the 200-day moving average. MBI stayed up above the T-line today, so it can still be bought on positive trading, because this basically told you it consolidated after your big Morningstar signal off the 50. Hasn't been able to really close below the T-line. That one's just barely. But if it opens positive, it will be breaking out through this downtrending channel, putting you also into a wave 3. And Bidu, just stay long as they can't close this below the T-line. Nice steady uptrend. Square. This one you should have been out of. If you're short, you get ready to cover it. But right now, there's nothing yet to tell you to cover your short position. And FIT, we did. All you can do is stay long on this as long as it stays up above the T-line. VTAE, a slow, steady uptrend, but again, you can see that it's using the T-line as support. The 50 is not acting as resistance. There's a big gap area up here, and then your 200. So stay long on this. Use the T-line as your stop. AK Steel, ever since the little Morningstar signal with the doji gap up, kind of acts like your mini scoop. There was your slingshot effect. Just stay long. Stamps, Nothing yet. You're in a downtrend until you see a candlestick buy signal and a close above the T-line. Now, I'd get ready, if I was short, I'd get ready to cover my short position on positive trading from here because that is a left-right combo, pretty strong signal. Freeport, another one where you stay long as it stays above the T-line. If you're buying, wait to see if they can get up through the 1150 level, showing your wave 3's in progress. Nugget flipped around today, but you can see where it tested, came back and tested the T-line. If you're going to be a buyer, a very high probability trade is if it starts trading above today's open, that tells you the J-hook pattern is definitely in progress. Tesla has to open positive. If it opens lower, close out the position. You've lost all trajectory and lost the trajectory of a J-hook type pattern. Apache, another oil that traded up nicely. Stay with this one using the T-line as your stop. Pfizer, also telling you that they're using the T-line as a support and the 200 as a support. If I was buying Pfizer, I'd probably put a buy stop right up in this area, the $33.35 level, telling me wave 3 has started. And EQIX, be a buyer of this one. Wave 1, wave 2, your doji, bullish confirmation above the T-line. You can buy this one on anything above this level right there. VIX, stay short till you see a buy signal. If we do MBI, yeah, you want to buy this one on positive trading. Blocks needs to get up above the T-line. Notice what it hasn't been able to do after the buy signal is close above the T-line. So it definitely, if you're looking to go long, you wait for it to get up through that level. AGI, stay long. Don't want to see it close below the T-line. You definitely want to see this probably trade positive tomorrow, kind of indicating a J-hook pattern is in progress. Trip, you can stay long on this one, but you can see you're kind of in a sideways, almost a dumpling top. So at this point, I would watch any of the resistance levels to see if there's a sell signal that shows up, and then I'd come right back out of it at those levels. CMRX, we did this one. This one had a nice little move to the upside today to stay long, figuring at least they're going to come up and fill the gap. All the targets, don't know. At this point, there's your first target right here. If it breaks through there, I think you'd probably be coming up into this area. So with this type of pattern, we don't know what the target is. All you can really do is stay long until you see a sell signal. Salt, same scenario. Fry pan bottom. There's your first likely target. Then if it really got running, it could get all the way up to the 200-day moving average. Amazon, you just stay long. Use today's open as your stop. And JC Penney, nothing yet until you can see a buy signal and a close above the T-line. It's trying. Stochastics in the oversold area, and you can pretty much see the 50-day moving average is acting as a support level. At this point, I probably would have covered a short position, and I wouldn't be long until it does close up above the T-line. Sears Holding, another one that's in a sideways channel. You can stay long. I'd also just use the T-line as your stop. Chevron, not a real exciting mover, but as one of the biggies, I would suspect with the big bullish engulfing signal today, you're going to see another wave on any positive trading from here. Twitter, Nothing. Just not a good looking chart. If I was, yeah, probably wouldn't even be playing it. If I was, I'd have to get through the $18 level pretty quick. And Disney did break out today, which makes this the upside potential, which is only about 3% away. So if you like Disney, you can stay long. I just wouldn't trade it because it's too institutional. PBR, stay long as it stays above the T line. Oh, the different indexes. Anything right now is just in a steady uptrend. So, and your stochastics are just coming up. It's still good backing and filling. So you're not in an overbought, exuberant area. Same scenario with the SPY and the NASDAQ. Again, nice backing and filling and then moving up. So as long as there isn't any wild big days, probably the uptrend is going to be kind of staying in a nice steady progress. No particular wave. There's no wave to any of the indexes, Diane. Just at this point is just a steady uptrend. Big belt hold on WPX, another one you can buy on positive trading. And UGAS, natural gas, you can see that it's sideways, but it's also doing kind of a little rounding top that failed at the 50. I'd be ready to short it if it breaks down through this level, making this your next target, and then see whether it holds there. What will be? Got me. And VNTV, slow, steady uptrend. Stay with it. Southwest, you stay long on this one. You can see you've broken out through this level, inverted hammer, next day bullish confirmation. Just stay long until you see a sell signal. Like we did Cara. Stay long. PXD, not really a belt hold, just like the other ones. Just opened lower and came back up. And it really didn't come out of the range too much. You can pretty much see that it's in the range. A belt hold would be something that opens way down and comes back up. But it still represents the same thing. They took out some sellers today, did a piercing signal, so more than likely it's in an uptrend. Zion, I would just stay with this, looking for the 200-day moving average to be the target. DBC, yeah, this isn't very exciting either. You can see there's really no powerful trend, but look for the J-hook pattern, which gives you the potential of coming up here to the 200. What is a belt hold? A belt hold, oh, somebody, what's a big belt hold out there that we could show as an illustration? UBIO, nice little J-hook. If it breaks out through this level, got some running room. Use the T-line as your stop. TNA, just stay long. Yeah, Mankind had a belt hold a while back. Where is it? I'd probably say more like right here, where they gapped way down and then came back up. That's kind of your belt hold. The Japanese rice traders explain it as that the wrestlers are wrestling, the sumo wrestlers, one's trying to back out of the ring, the other one grabs his belt and pulls him back into the ring. Tells you there's going to be more fighting. WB, big move today. Whoops, not big move today. Another one where all you can do is stay long as it stays above the T line. And Sonic, oh, Sonic, sorry. If you own it, it has to open positive tomorrow. If it opens lower, you close out the position because it's going to move in the direction of how they open it. And right now, to confirm a J-hook type pattern, it has to open positive and trade positive. Joy looks like it popped up through. Right now, just stay in a 45 degree until you see a sell signal. CPN, this one you can get ready to buy on positive trading. The bobble breakout with a bullish engulfing signal. And MDRX, another one you can buy. Notice it's using the T-line as support. If they open positives, telling us that the 200 is not acting as resistance, and you can see the J-hook pattern in progress. The dimple isn't anything more than telling you where about the halfway point is. So if this is the dimple of this fry pan bottom, you can take this and move this way, and then take this and move approximately the same distance this way, and that'll give you about where the breakout is. So because they're right now very equivalent from the dimple, that's where I'd be much more confident about buying on any positive trading from this area. TNA, we did just stay long. Oh, I think, whoops. No, that's Seabridge Gold. Yeah, and that's a very good looking J-hook pattern. I'm trying to think of what belt holds we had recently. A belt hold, well, belt hold is a single day. Let me get the difference between a belt hold and a J-hook. Yeah, this is more, what you would consider a belt hold. That was your trend channel, and then they gapped it down. So that's somewhat like a belt hold, which means they gapped it way down, took out a lot of sellers as they brought it back up. VNTV, no, I don't see a belt hold there anywhere. Took a dive after their planned merger got blocked. Would the hammer a few days ago be a hint of a coming reversal? Getting there. You can see where you are. Your stochastics down here in the oversold area. You've had a hammer. You've had a doji, a bullish engulfing. Your trajectory is starting to, so you have a left-right combo. So if this opened positive and I was short, I would probably start covering my short position. That would tell me there's support starting to show up at these levels. RXDX. That's a bearish belt hold. Yes. Notice how they gapped this one way out of the trading range and brought it back into the trading range in the overbought area. Yes, you probably want to be getting out of this one, especially if it opens lower tomorrow. When exiting trades, do you look for it to trade or close above or below? My number one criteria is the signal. Now, if it does a signal and we're way far away from the T-line and does a sell signal, yeah, I'm going to close it out because more than likely it's going to come back down to the T-line. If I'm kind of hovering right along the T-line and then I see a sell signal and a close below the T-line, yeah, I'll wait for it to close below the T-line. Yeah, kind of a belt hold over here. VNTV a while ago. Let's see if I can track it down. Sometimes, yeah, this might have been a belt hold. Sometimes, depending on the chart system, it's showing you where they opened it. So if this had opened down here and come back up, that would have been a belt hold. Yeah, so anyway, I'll try to find some. A little belt hold type. So not so significant that it's out of the trading range, because you can see it's kind of in the trading range, but significant enough to say, all right, they opened it lower and started right back up. That means the bulls are still there. Be ready to buy this, because they've taken out some sellers here. If it opens positive, it means there's not as many sellers in the way anymore. AN, notice how it broke this downtrending channel with a bullish Harami gap up. You can be a buyer of this one. I'd be more apt to be a buyer right now, being this close to the 50, waiting for it to get up through the 50. Because it's not really out of PXD. Why is this not a belt hold? You can call it a belt hold, but it's kind of still in the range. So, yeah, you can call it a belt hold if you want to, but it's a piercing signal. Doesn't really matter what you call it, as long as you recognize they took out a lot of sellers and came right back up above the T line. UBIO, no, we're not trading volume. We're trading price. So the pattern is still setting up nicely. ARIA, all you can do here is stay long now that it's kind of gapped up through this resistance level. Would you exit CVX long put at this? Would you exit CVX long put at the, yeah, if I was in a put, I would definitely be out of it now. There's nothing there to show you this is going to be going down. Okay, I think we got everybody. We'll see everybody bright and early tomorrow morning in the chat room. Everybody have a good evening.